Morning to you. Let's start with that story we mentioned there. London-based estate agent Foxtons that's reported a loss. That is for the first half of the year. It is watched pretty closely, frankly, because of what's happened in the London property market. It tends to infiltrate elsewhere. Well, it says that the property market has stagnated. Losses soared to £2.5 million. That's for the half of a year. Compare that to the profit of £3.8 million that it made in the same period last year. Well, Foxtons said the property sales market in London was undergoing a sustained period of very low activity. Sales were taking longer to complete. But it said that rental market was still strong and had confidence in its long-term prospects. So what do we make of that? Let's speak to Henry Pryor, who's an independent housing market expert. Henry, nice to see you as always. What do you make of these numbers? Because we look at Foxtons, don't we? Because it gives us a bit of an indication about what's happening in London. Is it true that what happens here is happening elsewhere, or are the two sort of diverging more than ever?
Well, frequently what we see happening in London ripples out across the rest of the United Kingdom over time, and I suspect we will see the same with the housing market. But as you were saying in your introduction, mortgage approvals, both for new mortgages and remortgaging, has held up quite well. There is a market. We know from the transaction numbers from both the Taxman, HMRC, and from the Office for National Statistics just last week that sales are happening. The problem for Foxtons and London-focused businesses is that turnover, actual sales of properties is down roughly 25% year on year. So no surprise to find perhaps that Foxtons' problems come from sales revenue. They've struggled over the last 6 months, according to these numbers, and other companies like Countrywide, historically the UK's largest estate agent, have been suffering in a similar fashion. Foxtons shares, Ben, 4 years ago were just short of £4. They closed on Friday at just 40p. So that probably gives you an understanding of what the markets, what the city in particular, how they view the housing market.
Yeah, absolutely incredible, isn't it? That big change in fortunes for them. And is it fair to say, Henry, that what we're talking about here is looking back, isn't it, as far as Foxtons is concerned, because it's the first half of the year. But you touched on it there. Those mortgage approvals now look pretty healthy. So actually the next 6 months could be okay.
Well, it'd be a brave man to bet against a firm like Foxtons. Ever since the 1980s, they were very much the pin-up poster boy of London estate agency, something of a brand that engendered a lot of emotion both in buyers and sellers and amongst their competitors. So I suspect we're going to see some significant changes and probably some important improvements. But the market is changing, and just like the print media, which again you mentioned in your introduction, estate agency is changing. We're seeing technology coming into play. The stock market now fancies the likes of Purple Bricks and eMove, online estate agents, as they are sometimes termed, and indeed Rightmove, who are turning in 75% profits in announcements that they made to the stock exchange just last week. The market is changing. Buyers and sellers, consumers want something different. I'm afraid in the first half of this year it appears that Foxtons and others haven't delivered that, but there are always brands that will be.
OK, it's good to talk to you. Thanks very much, Henry Pryor there, independent market expert for us. Thanks very much for talking us through those numbers.